Cash might seem safe, but inflation has stealthily eroded its purchasing power by over 90% since 1950. Imagine your $100 today would buy you less than $80 worth of goods in just 10 years. This video will explore 8 assets that protect your wealth and help it grow. Stay tuned to learn how to beat inflation and secure your financial future. 1. Gold and precious metals. What has been a reliable store of value for more than 5,000 years? Gold. Gold is not only beautiful but also long-lasting. During the 2008 financial crisis, when stock prices plummeted by over 50%, gold prices soared by nearly 25%. Silver and platinum, also precious metals, are used in different industries and therefore are in higher demand. In addition, gold acts as an inflation hedge. For instance, during the 1970s, when inflation was at double-digit levels, the price of gold increased by more than 500%. You can protect yourself from turmoil by including precious metals in your investment portfolio. 2. Real estate. Why do so many billionaires invest in real estate? Because it's real wealth. Real estate has long been a reliable investment option. Many have been attracted to it because it generates passive rental income while appreciating over time. The physical aspect of the property and the option to leverage it further make it an even more attractive value proposition. Think about it. Owning a rental property valued at $300,000 with a 6% annual return could generate $18,000 in passive income while also seeing your asset appreciate. Additionally, real estate frequently outperforms inflation, making it a reliable strategy for building wealth. 3. Treasury Bonds. What's one of the safest investments out there? Treasury Bonds. Treasury securities, including T-bills and T-notes, are considered very low risk because they are issued and backed by the US government. They offer a secure way to earn a return, although typically lower than more aggressive investments. Treasuries are often viewed as risk-free since the federal government guarantees them and has never defaulted. These government bonds are usually ideal for investors looking for a safe place to park their money, especially during market volatility. Thanks to an active secondary market, they also provide high liquidity. 4. Index funds and ETFs. What if you could invest in the entire stock market with just one purchase? Index funds and ETFs are revolutions. These affordable investment options follow market indices, such as the S&P 500, that have provided a 10% average annual return over the past 100 years. Instead of picking individual stocks, these funds diversify your investments, reducing risk. For example, in 2020, when the COVID-19 pandemic caused a market downturn, investors with broad-based ETFs recovered their portfolios faster than those who invested in individual stocks. 5. Dividend-paying stocks. What if your investments could generate income while you wait for their value to increase? Dividend-paying stocks like Johnson & Johnson and Coca-Cola deliver reliable payouts even in tough economic times. Over 30 years, reinvesting dividends has contributed to almost 40% of total market returns. For example, when you buy 1,000 shares of a company paying $3 annually in dividend yield, you receive $3,000 annually, irrespective of any situation in the marketplace. These also present a prospect of long-term capital appreciation and a guaranteed flow of dividends. 6. Industrial raw materials and commodities. You will likely wake up one day and feel smart to buy industrial raw materials. Copper, steel, and aluminum are critical construction, electronics, and manufacturing materials. Their prices tend to rise with economic growth as their demand increases. For example, copper prices rose by over 70% between 2020 and 2022 when global infrastructure projects began to take off. Investing in these materials directly or through commodity ETFs exposes you to economic growth and protection against inflation. 7. Cryptocurrency. Can digital gold be the next safe asset? Cryptocurrencies, such as Bitcoin and Ethereum, are increasingly emerging as alternative investment forms. Since the number of coins minted is capped at 21 million, they can be viewed as a hedge against inflation. In 2024, Bitcoin's price more than doubled to over $100,000. This surge was driven by various factors, including US regulators approving exchange-traded funds, ETFs, tied to their spot price, and increasing hopes that Donald Trump would return to the White House. While the crypto market is volatile, putting 1 to 5% of your portfolio into cryptocurrencies can add a diversification component and provide potential long-term growth. 8. High-yield savings accounts. Why let your money sit idle when it can earn more? High-yield savings accounts are low-risk banking options that offer interest rates higher than standard savings accounts. Online banks, which usually have lower operating costs than traditional ones, can often offer these accounts attractive rates. These accounts provide excellent returns compared to a standard savings account. However, they are still safe in case of financial loss. FDIC insurance covers account losses up to $250,000 per depository institution, so you won't lose that money. The bank's security and liquidity allow you to access your savings anytime. The million-dollar question, but what is the safest place to keep your money? The safest investment can vary depending on individual perspectives and economic conditions. Still, cash and government bonds, particularly US Treasury securities, are often cited as among the safest investments because they carry little risk of loss. Still, it is essential to note that no investment is entirely risk-free. With cash and government bonds, there is the possibility that inflation will outstrip the yield, which can gradually reduce purchasing power. So there you go. 8 things that are safer than cash. Gold, real estate, and industrial raw materials all offer different benefits that will help keep your money safe. If this video has helped you, give it a thumbs up, subscribe, and share it with anyone interested. What is your favorite investment? Leave a comment down below.